Hello and welcome to Zee Commodity Capsule, a segment we have designed in order to wrap up the entire week's commodity market activities as a whole. This week was truncated owing to holidays, public holidays in US and UK markets. Having said so, it was a very choppy week price-wise for all the global commodities. Gold, silver, base metals are poised to end the week in green. However, crude oil and global agri-commodities are set to post weekly losses. Now, the key factors cheering factor was the approval of the US debt ceiling in order to avoid a default in world's largest economy. Dollar index marked its steepest one-day correction, which was seen happening for the first time in nearly 3 months, and it has brought the index down to key 103.5 levels. And why did this happen? Because some Fed officials, they called for the central bank to consider holding the rates steady for the month of June. So these were the primary factors because of which we saw global agri-commodities surging. Now, despite this, crude oil definitely saw a rebound, but the commodity is headed for its first weekly loss in 3. Both Brent crude or WTI crude, they are headed to end in red, and they are down nearly 2.5 to 3% so far this week. Other factors which are creating pressure, first of course there's uncertainty ahead of the OPEC Plus meeting, which is going to happen on 4th of June. That's on Sunday. That is keeping a check on the gains. HSBC, Goldman Sachs, along with many other bankers and analysts, they continue to believe that any further output cut is most unlikely in this particular meeting. Also weighing upon the commodity was the fact that the US crude oil inventories, they registered an unexpected jump last week by nearly 45 lakh barrels versus the expectation of a drawdown of nearly 11 lakh barrels. Coming on to gold, it's hovering near its $2,000 mark, which we have seen coming after nearly 2 weeks. So this particular week, although truncated, gold has managed to inch higher, and the weakness in dollar index, it has only accelerated its strength. Same is the case with the silver. It is past its $24 mark. It is set for its first weekly gain in 7. Now, all eyes are going to be clearly on the non-farm payrolls data, which will lend more cues for the economy. Steep correction in dollar index and the broader strength in the industrial metals continues to support silver. Coming to base metals, we definitely saw it recovering from its recent multi-month lows, be it copper, aluminium or zinc. London copper, it has recovered from its 6-month lows. The red metal is up nearly 3% this week. What are the factors driving it? The recent manufacturing PMI data from the private agency Saxon, that seems to be supporting the metals. However, it's quite contradicting to its government data, which indicated that the manufacturing and the service sector, they are lagging near 5-month lows. So this is one thing which market has cheered with the recent data. Also, we saw aluminium on LME. Now it seems to be ending the week in green by nearly 2.2% higher, while zinc will most likely end this week on a flat but on a positive note. Total LME inventories, they are standing at nearly 1-year peak, and they have been growing rapidly in last 10 days. Having said so, most of the brokerages, they are not convinced about any kind of strength coming in. Metals, ING expects these coming days to be very choppy for copper, and they see an average of $8,500 a ton happening for year 2023. Commerce Bank has recently trimmed all its forecasts for all the metals. Particularly if you consider copper, they have trimmed their previous forecast of $10,000 now to nearly $9,000 a ton. So there's been a trim of $1,000. Clearly they believe that unless and until a clear signal of Chinese demand comes in, the prices are not going to go higher. Global agri-commodities, they have witnessed very heavy volatility, although in Thursday's session, a sharp recovery did come in grains and oilseeds and edible oils. We have clearly seen that all the agri-commodities are set to end this week in red. Particularly if you see Malaysian palm oil, it is set to decline this week by 5.5%. This is all for the week. We'll see you next time.